Welcome everyone, it's the Crypto Lark and I'm super excited to have on today Todd from Digitex. Adam, welcome.
Hey mate, thanks for having me.
Absolute pleasure. Now Digitex has been getting a lot of chatter recently, but for anybody who hasn't heard about what you guys are doing, give us the short version.
Well, basically we're a commission-free futures exchange that's also going to be non-custodial. So you're going to be able to trade futures contracts on the price of Bitcoin, Ethereum, etc., but you're not going to have any trading costs on those trades. So you're going to be able to trade very short term, make very small profits, and actually make a profit. And we're also going to be non-custodial, which means that you're going to be able to trade on the exchange without having to trust the exchange with holding your money, which is, a crucial part of crypto that everybody seems to have forgotten about. But even up until now, it's really not possible, because to do that, you need real time, the ability to put things on chain in a real time trading environment. You need to be able to do real time trades and put those on chain. And we don't really have that ability yet, but that's coming very, very soon in the next few months. We're working on that hard right now. And that's really going to be the big thing, real time on chain trading that is trustless and commission free.
Now, I actually want to just jump straight into expanding on that idea, actually, because I think this is a very interesting part of what's actually going on here, is the plasma solution that you're working on, because this is an ERC20 token, and in terms of like, I need to make a trade really fast, right? Ethereum might not always do that for you if there's a big ICO going on or something, right?
Yeah,
so,
plasma is basically, the Lightning Network, for Bitcoin is. Plasma is basically just speeding up the Ethereum blockchain so that you can actually use it for real world high volume usage, such as a real-time trading exchange. Plasma is basically a side chain of the main Ethereum blockchain, but that side chain is fully verifiable. So it's super, super fast because we can run it on a single node. So we can literally do, 10 blocks a second. We can commit 10 blocks a second. This thing's on steroids, but every minute or two, we batch commit all of our blocks to the main chain. And we have all the safety guarantees and the security guarantees of the main chain, even though we're using this very fast side chain. So basically, once we've got that plasma solution working, it's fast enough, we can put things on chain fast enough that they can go in the flow of a real-time futures transaction, and we can actually let you trade on our exchange just from the plasma sidechain telling us, how much money you've got, rather than us having to have that money. Because we don't actually want your money. When we hold your money, there's all kinds of problems for us. we're a target for hackers, for instance.
Oh, wow.
If we're a non-custodial exchange, there's no point hacking into our exchange because we have no private keys. Traders will be able to withdraw their money at any time they want for whatever reason they want, because we don't have your money. We cannot hold it. So that's really what plasma is going to enable us to do, which I think is going to be huge. Obviously, no commissions is a big thing. People love paying no commissions, but the whole non-custodial aspect of it, which is coming out mid next year, I think is going to be huge.
We're seeing a lot more non-custodial exchanges coming out. I think the big problem for a lot of the non-custodial exchanges, being called decentralized exchanges normally, is that they have terrible liquidity. There's almost no one using them. Now, it's
because they're so slow too. We don't have that ability. To put something on chain still takes you 10, 15 seconds. That's just too slow to trade with. It's too slow.
That's right.
You're not going to get liquidity in an environment like that.
That's right. If you're just going off to buy, like, I'm going to buy 1,000 of these tokens and put my wallet forever and just forget about them, whatever. Okay, well, that's fine, but that's not trading. And if you're trading, you actually need these higher latency times, or I guess lower latency times, to be able to get in faster. Right now, you guys have 500,000. Well, I think it was like 560,000 or something on your.
Yeah, it goes up a lot every day. I've lost track of it right now. It's just gone crazy. We started that list a few months ago, and it's just gone ballistic. It's at one point we had 10,000 people a day signing up to that. We've got at the moment we've got 40,000 people a day visiting our website. It's the interest in this has just gone crazy. There's a lot of interest in commission-free trading. The non-custodial side of it, like I say, gets a lot of interest, but really the commission-free side of it and just the whole look of it. A lot of these exchanges they're not that nice to use. They're a little clunky. The interfaces aren't the best. You know, if we just come out with just a nice interface, a decent exchange that works, that's got zero commissions, non-custodial, and we've got that kind of volume of people on there, we're also going to have the liquidity. And commission-free trading naturally promotes liquidity too, because it encourages all the shorter-term traders to just go crazy. They all become hyperactive lunatics, buying and selling and doing what they want to do, and make a tick, lose a tick, scratch. It doesn't matter what they're doing, but they can do that, and they create massive liquidity by doing it. So that kind of environment, with the kind of numbers of people we've got queuing up waiting to use this, I think this thing's going to be, it's going to be really big. We're going to start off with our market makers too. So on day one, you know, we're going to have liquid markets with very tight spreads, and I think it's going to mushroom from there. Very cool.
It's certainly, I think, impressive to see you have that many people signed up before you even launch, and a lot of the
I know it's kind of amazing. Isn't
it's crazy, and a lot of the decentralized exchanges that are out right now would love to have that many customers ever, let alone signed up waiting to use their service.
Right, and that's the thing with a lot of these crypto projects. A lot of people think it's the white paper and it's the idea, and obviously the idea is important, but it's like any business. Any business at the end of the day is a marketing business. That's what everything boils down to. There's no point having a great idea for an exchange if you're some nerd sitting in his bedroom and nobody knows about it. You know, you need 600,000 people waiting to use that. You need to have marketing abilities and marketing chops and the budget to do marketing, to actually get, you know, people coming through the door. And that's what we've got at Digitex. We've got the combination of a good idea with good execution, you know, of building that project, and the good marketing. So we've kind of got everything right. And that's why it's, you know, taken off. That's why you're seeing Digitex everywhere.
Nothing wrong with making people excited about your product, especially if you have a product to offer and it's not just, you know, meaningless hype, right? But to actually get people excited, like, hey, we have something exciting coming for you. Be excited about it because it's coming.
Yeah. And we got to show it off in November at the Malta Blockchain Summit. You know, we had a big stand at the Malta Blockchain Summit, and we had the demo running there. So we were showing the demo to people individually, and I also did that live stream from the stand as well too. So we got to show everybody that it's real, that it exists, that it looks nice, and, you know, just interest has gone from there.
Very cool. Now, for anybody, it's a futures exchange, and for anybody who might not be familiar with what futures are or how they work, can you just give a real basic level explanation? So if anyone's like, what are these guys talking about? They can catch up real quick.
Sure. Futures are very simple. A futures contract is just an agreement to buy or sell the underlying instrument at a fixed date in the future at a price that you're agreeing on now. That's all it is. So basically, you're buying and selling promises to buy and sell something at a fixed date in the future, rather than buying and selling that thing. And it's a lot cheaper and easier to buy and sell promises than to actually buy and sell the actual thing. So futures trading in that sense helps bring speculators in. It makes it much cheaper and more convenient and easy to buy and sell relatively large amounts of the underlying instrument without actually shifting that underlying instrument between buyers and sellers. And the advantage that comes from that, the main advantage, is that you can now use leverage, meaning that because this product isn't constantly shifting between people, you don't have to pay for it in full. You just have to put down the amount of money that you might potentially lose on that trade. So it allows you to trade with a fraction of the money of the cost of the underlying instrument. So it gives you that leverage, which allows you to get outsized gains if you get it right. But, you know, the flip side to that is you can blow your bank very quickly with futures trading too, because you can, if you're highly leveraged and you get it wrong, it can be pretty painful. But that's basically what futures trading is. You're buying and selling promises instead of the actual thing, and there's just a lot of cost savings in doing that.
Now, there are a lot of people who make a lot of money doing leveraged trading, but there's also a lot of people who lose a lot of money. For someone who's, I guess, new to the idea of leverage trading, what would be your advice to somebody who's interested in dabbling their toes into leveraged trading to be safe and to not, you know, not lose their shirts essentially?
Right. Well, obviously, just start with an amount of money that you're okay with losing. You know, that's really got to be the advice all the time. You're going to build it up. If it's working, you'd be amazed how fast it builds up. You know, when I started trading, when I was trading years ago, horse racing prices on Betfair, and I started with £200, and that's literally all I started with, and I borrowed that from my dad as well. Wait, I never paid him back actually, but that's what I started with. And that from that one bank of £200, you know, it just went from there, and I made a living from that for years, you know, 7 or 8 years or however long it was. It's, if you're consistent, you'll be amazed how quickly profits will build up. If you're just inching forwards and not having big blowouts, you'd be amazed how fast it builds up. So my advice would be to start small, but just try and focus on being consistent.
There you go. I'm sure your dad looked at it as like, oh, I gave him £200, but he went out and did something with himself, so it's good. He's not going to come ask for money anymore.
He's lost track of all the £200 he's lost on me, I'm sure.
Dads are good like that. Now, Digitex futures, it's, you know, Bitcoin futures, it's Ethereum futures, perhaps some other coins coming in the future. How is this going to compare with what the, you know, everyone else is talking about, the CBOE, the CME? They've already got their futures out. Backed futures are coming. NASDAQ futures are coming. Mm-hmm. How do you compare with those?
They're just they're completely different. I mean, backed is going to be great for crypto. I mean, backed is going to be something that brings in the institutional money, brings in, you know, it just makes it easier for people to use crypto and store crypto safely. But it is basically just a big centralized bank for crypto, basically. You know, and it is for institutional investors. It is very, very good for bringing that institutional money in, which is what we need to, you know, put prices up, to get acceptance, to get mainstream adoption. But, you know, for actually trading, it's, you know, you've got all the costs of that regulation and that safety that you've got there. There are costs with that. And as an institution, you absolutely need to pay those costs. They don't mind. They've got big compliance departments. They have to do that. For the retail trader, you don't need to trade, you know, on backed futures contracts. Backed futures contracts have got no leverage, no margin. It's physically delivered, and the Bitcoins are physically delivered on a daily basis. So it really is that the backed futures contract for Bitcoin is very much a you know, a vehicle for institutions to put money into Bitcoin in a way that they can, you know, answer to their compliance departments. It's not for the small retail trader by any means. So we're not really even competing with backed. Same with CBOE, you know, CME, anyone that wants to trade on those big exchanges, they're the institutions, they're the big professionals. They're not the type of traders we're after. You know, we're really not competing with someone like backed. So Digitex is for the small retail trader who wants to trade on these big markets, but doesn't want all those costs that come with, you know, dealing with those big institutions.
Yeah, and I think, I don't remember specifically, but I think was the backed futures like 25 Bitcoin or something like that per future contract?
Was the CME. Yeah, that was the CME one. Yeah. Yeah, it's expensive. And the leverage, you get something like 50% margin too. So you've got to put a big chunk down. The trading commissions are, you know, big. You're probably looking at a good few dollars. Even if you're, you know, an insider, you're probably not looking at a few dollars a round turn. It's just impossible to make any money on that. You know, as a short-term trader, not as a long-term. As a swing trader, then maybe, yes, if you're good at that kind of stuff. But as a scalper who's, you know, buying the bid, selling the offer, just trying to go with very, very short-term sentiment movements, you can't do that on these bigger exchanges that charge round turn fees the way they do. But on Digitex, you can.
Now, the futures market is just massive overall, but you're not really aiming at the entire futures market. You've got a niche here where this is for retail investors who want to come in and basically play the game. You know, this is not for people who want to go to the stock markets and all that. And now I want to actually start exploring a bit your token. So the Digitex token, this is going to be everything in the platform. So if you want to put $1,000 down on the price of Bitcoin in a week, you have to pay that $1,000 in Digitex tokens, right?
Right. The thing with our exchange token is that use of the Digitex token is compulsory. So the bigger and better the exchange gets, the Digitex token is going to very efficiently capture that value. You know, a lot of these tokens that come with these ICO projects, the token was just tacked on at the end as kind of a fundraising plan. You know, let's do a token and raise a bunch of money. The difference with us is the Digitex token is an integral part of how the whole system works. You know, we're commission free because we make the only currency that is valid that can be used on the Digitex Futures Exchange is the Digitex token. And that, you know, your account balance is denominated in that, your profits and losses are denominated in that. So that creates that demand for the token. And because of that demand for the token, the exchange can cover its costs by minting a small new number of new tokens each year instead of charging transaction fees on trades. So it's not complete, it's no transaction fees on trades, but it's not completely free, because obviously minting new tokens comes with a cost, and that cost is a small inflation rate, i.e. a small devaluation of the existing tokens. So instead of it being, all just transaction fees on trades, which penalizes the most active traders, instead we're spreading the costs around proportionately amongst all participants of the exchange, on the understanding that, it's worth those costs, other people paying some of those costs, because you want those active traders to be left alone to be able to create the kind of liquidity they do. So that in essence is it. It's an inflationary cost instead of a transaction fee cost. But that inflation pays for the ongoing upkeep of an exchange that creates huge demand for your tokens. So yes, there's an inflation rate cost, but there's an increase in demand for the tokens, which then offsets that cost. So that's what the token owners have really got to do, is figure out what inflation rate they're happy with compared to what increase in demand they'll think they'll get from that inflation rate.
Using your own native token for this, considering you've got the Plasma sidechain, considering you've got the non-custodial wallet, it all makes so much sense, because you wouldn't be able to do what you're doing if you were taking Bitcoin and Ethereum deposits and XRP deposits, and you sent it. This actually shakes up the model by having a ERC20 token running on Plasma and a non-custodial wallet. It allows for all of this to happen in that way.
Exactly. There's a real reason for using the token. The token actually is needed. It doesn't work without the token. So as I say, the token will very efficiently capture the value. As the value of the exchange increases, as more and more traders are on there and liquidity increases and people are attracted to commission-free, non-custodial futures markets, the Digitex token will directly capture that value, because all those people coming in have to buy Digitex tokens to participate.
Interesting. Now, the inflation of tokens over time, this is a community vote. There will be a governance right, I suppose, inherent in the token. So what happens if the community votes to not print more tokens?
Well, this is the big experiment, isn't it? What the assumption is that token holders will act in their own collective best interest. That's the assumption we're working on here, that everybody always acts in their own self-interest. Now, the collective self-interest of Digitex token owners is to keep the Digitex Futures Exchange going, is to keep the lights on, to keep it being developed, to keep it being marketed, because that creates huge demand for the Digitex tokens, which, puts the price up. So the token owners, in theory, aren't going to vote to not fund the exchange, because that will cut off completely all of the demand for their tokens and the price of their token would collapse. So in theory, what they're going to do is they're going to accept a small inflation rate of, say, 3% or 4% or something. They're going to figure out how many tokens need to be minted, to cover the projected cost of the next year. So they're going to say, well, okay, we should accept a 5% inflation rate, devaluation of our current tokens here, because if we don't, the token's going to go down to nothing. If we do accept that 5% cost, then that funds the exchange for another year, which could, double the price of the token or something in the next year. So that's the theory, is that they're going to act in their own collective best interest.
Ooh, it's curious. I wonder, is it like an experiment, right? How's it going to play out? We're going to have to, of course, wait a couple of years for the first round.
The interesting dynamic is, I shouldn't be saying this, but I like to put things out there. The interesting dynamic is, if you got people involved in the project that were trying to scupper it, what happens then? What happens if you get someone who doesn't care about $1 million or whatever, and he puts in a big amount of tokens and just keepes voting no, and there's that whole aspect of it. Exactly. So, and then that's another reason why we don't like whales. I want to get one of those graphics made with like a whale with like a big like red sign around it across. We don't like whales, because that's a problem that whales would bring in potentially. The more normal users we've got, normal token holders that just have smaller amounts, they're not going to vote to scupper it. So that's just one interesting thing that we're going to see as we go along, how people are going to vote.
Yeah, it's certainly an interesting experiment. So essentially there's no fees for using the exchange, and after 2 years you're going to print more tokens.
Yeah, the token issuance doesn't start till 2021. So the token issuance is going to, the higher the token price is when token issuance starts, the less significant the effect of inflation is going to be. So I mean, just to take for instance, if by 2021 the token gets to $1 a token, and say we need $5 million a year to cover development, marketing, whatever costs we've got, that means we've got to issue 5 million new tokens this year. Well, on a total supply of 1 billion, that's a 0.5% inflation rate. That's a 0.5% devaluation on your current tokens. I think crypto people don't have a problem with a 0.5%, devaluation, the drop in tokens. It
only 0.5%, I'll take it.
Exactly. I mean, it can drop 10% tomorrow. I think discussing single-digit inflation rates, I don't think is going to be a big problem for people that are willing to be involved in crypto. I don't think a single-digit inflation rate is going to scare anybody, especially when you consider the benefits you get from that, which is a fully funded, highly liquid futures exchange that doesn't need to charge any commissions now because it's got this money to, and that we market that correctly, which we are doing. We've seen what we've done with the waitlist. If we can get people through the door, the demand for the token could be really, there could be literally millions of people buying just a small amount of tokens each. But if you've got 1 million of them, that's real demand, from real people that aren't buying it just to speculate that it's going to go up or down. They're actually buying it because they're going to use it.
Yeah, well, with 500,000 plus people signed up, that's a lot of people who want to use it. And even if they're only coming in at $50 a person, which most people are probably going to come in at a lot more than that, it's a lot of demand.
And even if they come in at that, even if they come in at less, and this is just us started, that 500,000 on that wait list, that's without a product. And we only started that wait list a few months ago. When we've got the product, and I'm making, regular trading videos, and it just carries on going and going and going. I mean, we're not going to stop. The marketing is only going to get bigger and bigger. And then we've got the spot markets that we're going to introduce later on, which again are going to be commission free, but we're going to introduce some kind of staking system where to access the commission free spot markets, you've just got to stake a small amount of Digitex tokens. And then once you finish trading, you can just, sell those and get your money back. So it's not actually costing you anything, but it is making you buy Digitex tokens. So again, if we attract another 1 million or 2 million people to the spot markets, that's another 1 million people that have all got to buy 50 or 100 Digitex tokens each. Even though they can sell them again and it doesn't cost, they're not giving us any money as such, but they're creating demand for the token, which will increase the token's price, which will lessen the effects of inflation, because with a more valuable token, we have to mint fewer and fewer tokens.
Yeah, well, it's just like a deposit, right? I'm just thinking though, without the steady fees coming in from trading, Arthur Hayes is just has multiple pools full of money that he swims in every day from Bitmex because they're making so much money.
Right.
How do you compete with that in terms of marketing and really getting your message out ahead of people when Bitmex has so much more money and have this continual revenue stream coming in? How do you compete with that?
We do need money. There's no doubt about that. We need money. I would like at least 10 million a year to run the exchange, preferably. If we could spend 3-4 million a year on development, 3-4 million a year on marketing, we'd kick the shit out of Bitmex. We really would. Our Telegram channel is already busier than Bitmex. We don't even have an exchange yet. We haven't even started yet. We've got a lot of things that we're going to do that can get this in front of millions of people. And yeah, we do need money for that. We need to, get the mechanisms set up. We need to get the token price high enough so that we can make that kind of money, 5 million, 10 million a year. But I think that isn't a problem. I think that's very, very doable with the kind of numbers that we're already getting on our wait list, the kind of numbers that we expect to be using the exchange. If we can make 5 or 10 million a year from selling tokens, then I think we can give Bitmex a very good run for their money.
Interesting. Yeah, time will tell, I suppose. Now, can you just confirm, where is the company registered at? 'Cause I think there was a bit of confusion around this, at least for me, because I was checking on the website where the company's registered at. And then I guess you guys have moved to Ireland, or can you address that?
The company's registered, Digitex Futures is registered in the Seychelles. But then what we did is we set up a separate company in Ireland, which was just for the development, because I wanted to build an in-house development team. I didn't want to, just go off to, some Eastern European country and hire a remote team for $35 an hour. You can do that. It works. There's some good teams out there, but I've done a bunch of software things before, and I just wanted an in-house team that just focused on my stuff, that just worked for Digitex. So I wanted to do that in a first world kind of tech friendly place. Dublin looked good. The guy that we had our eye on initially as the team leader was already in Dublin. Another couple of guys were. We set up that Digitex Software Limited as an Irish company that basically its only client is Digitex Futures, which is the company that's registered in the Seychelles.
Very, very cool. And so the guys working on it, the tech dudes, they're in Ireland. Are they still there?
They're in Ireland. Yeah, they're in Dublin. And I'm actually going to Dublin next week to go join them for the, up until the launch too.
Cool.
So I'm looking forward to that. Yeah, it's nice having all these really smart guys in one room just working on your stuff. It's amazing the quality, the difference in quality that you get from, that to remote workers is, I've no problem against remote workers. They're very competent people, a lot of them. It's just when you've got your own team and they're all working together in the same room, you just get that next level of quality that you can't get with, remote teams. I've never got that with remote teams anyway. What I'm getting now is way better than the remote team side of it. It costs more to set up. It's more of a pain in the ass to set up. It's more expensive. It's more difficult, but, well worth it.
I think the long term of that will definitely pay off.
For sure.
Now, so in the Seychelles, then that's where the company's registered. It's sort of, a corporate entity address.
Yeah, I mean, to be honest, I was doing the ICO last year. We needed to put it somewhere. Seychelles is as good a spot as any. It's an easy place to get things set up like that. We are considering moving to Malta. We're at the Malta Blockchain Summit.
That was going to be my next question, actually.
Right.
So good.
Because, I'm aware of how the Seychelles sounds. It has that kind of connotations. That, first of all, is where is the
beautiful
Seychelles?
Beaches and money laundering.
Exactly. Yeah. If we can move to an EU country like Malta, Malta's becoming the center of the crypto universe right now. We were there. The Malta Blockchain Summit. We met a bunch of people. We already know a lot of people in Malta. I used to live there for a year. Lee, our COO, he lived there for 10 years. He knows everybody. It's a very good place for us to possibly, incorporate there soon. We're still looking into it, but it's certainly on the cards that we would be moving to Malta from the Seychelles.
Very cool. Now, in terms of, I guess, all this stuff that you have to go through, the KYC, the AML on the platform. If it's a non-custodial wallet, is there going to be KYC, AML for people to use the platform?
That's a good question, because I personally hate KYC. I think KYC is a huge waste of time and money. I don't think it really does anything, especially with crypto. If you've already got Ethereum, you've already laundered that money. You're not going to launder Ethereum into Digitex. It's kind of ridiculous to say that. But, these days it seems like everybody says you've got to do KYC, so you've got to do KYC. Probably if we move to Malta, we're probably going to have to get our KYC game on there. But just the way I would like it to be, you're exactly right. If it's a non-custodial account system where the exchange cannot prevent you from withdrawing your money, even if we want to, what's the point of KYC? Can we operate a non-custodial exchange like that without KYC? I don't know. I would like to explore that with, the necessary, if we go to Malta, for instance, I would like to explore that with the regulators and say, look, I actually can't prevent them from withdrawing their money. I can't prevent them from depositing money. This is
That's not how it works.
Right? It's an independent smart contract on the Ethereum blockchain that holds their money, and that communicates with our exchange as to how good their credit is for the next trade. But we're not actually holding their money. So can we get away with no KYC? It's certainly something I'm going to look at and I'm going to press for, because, as I say, KYC is a huge waste of time. If we can have an exchange that eliminates KYC, that that would be great. I don't know if that's possible. I don't know if I'm just saying the wrong thing here, but that is the dream.
Just your fantasies, like, oh, if
Just
only
my
we could do this.
fantasy. Yeah. I don't know whether I can get away with it, but if I can get away with it, I will be doing.
Yeah, I think I guess time will tell, of course. But the move to Malta, I think, would probably follow EU regulations and all that fun stuff. But,
yeah, that's the only problem with the move to Malta. It gives us a lot of credibility, but let's be honest, we are going to have to do some kind of KYC if we do that. So
right, you have to deal with Brussels then, right?
Yeah, exactly. It's it's a compromise. So I don't know yet is the answer.
And I guess one other thing, I guess it's not particularly related, but kind of related to that, is that Americans technically are not able to use the platform because of the ongoing, regulatory mess in America. Yeah. So how's that actually going to be enforced? Is there just going to be sort of a wall around America, so to speak, or is it just going to be like random website, like no Americans, please?
I mean, when the exchange opens, we're just going to, keep it simple. We'll probably just block US IP addresses. You'll have to check the box that says you're not US resident or citizen. And that's really all we can do. I guess an American could come around with a VPN. I guess we could start looking for VPN. It depends how seriously we have to pursue this and have to enforce the SEC's rules for them. Because again, I reject the notion that because I'm building an exchange, you can now recruit me as some kind of IRS agent or some kind of policeman.
Right?
Just because I'm running an exchange, I don't believe I have to do those things. But again, probably other people disagree with me. But yeah, we'll probably just block US IP addresses, make them check a box. I don't see what else we can
those box checkings are very effective at keeping people out. It's
yeah, that's right.
It's so funny with regulations how you have regulators coming up with stuff and they say, oh, we'll make people check boxes, and it's
that's
just
right.
Like, you guys know the internet exists, right? Like that's a thing.
Because no one in crypto would check a box if they weren't being entirely honest.
Now, how do you prevent, I guess, like spam attacks? If you don't have any commission fees and you're running on, Plasma, theoretically, I guess the fees are going to be super, super low to be moving things back and forth. How do you prevent people from, I guess, just trying to spam the network with like lots of, tons of tiny trades to try and bring the network down or something like that?
Yeah, there's that aspect of it. I mean, we're going to put some kind of rate limit on your trading. Obviously, we're going to see what makes sense at the time. But I think if we put some kind of, 5 trades a second rate limit on it, the system could certainly handle that. But it's meaning that you can't really be spamming it that effectively. As far as the network fees, the Plasma sidechain, the way it works is because it's just our node committing, running all those blocks, running that blockchain and committing those blocks. Really, we've only got the infrastructure costs to cover. So yes, those infrastructure costs will go up if we're getting constantly spammed. But as long as we can keep some kind of sane rate limit on it, I think we'll get away with it. It's something we're just going to have to, suck and see. These are the things that we're going to see when we go live, which is why we're going to be opening to a small, select, friendly group and then build it from there.
And now, in terms of the live event, was this originally scheduled for Q4 of 2018, but it's been moved back to Q1 of 2019. Is that correct?
Well, we've been saying end of Q4 for pretty much all year, and we've now put a date on it of January 15th. So it's kind of like 2 weeks after.
2 weeks late. Oh no!
I know. But, we had to put a date on it. So we put January 15th. That's actually the anniversary of our ICO. We did the ICO January 15th. And then January 15th, we're getting to launch the product. It sounds like a long time, a year. But you've got to bear in mind that with this project, everyone's been in it from its idea phase. Like from the very idea phase when it was just a white paper. And then we used that to raise all this money. And then we've had to build the team. And then we've had to, get them started from nothing. So, really, if it seems like a long time, it really isn't. It's just that everybody's in it from the very start, and it's actually, which is kind of exciting.
On the flip side, I think, wow, that's really, a year, pretty good. I mean, it's a lot of stuff to come together. And anybody who's never started a business really has no idea how many different pieces need to fall into place, how many things you have to deal with, and all these different pieces have to come together, and you have to launch something that works and is user friendly and actually makes people want to come back on day one, because if you launch on day one and you screw up, your chance is gone.
Right. Exactly.
So I think a year is actually
I
quite
think it's pretty
impressive
good.
for a
I
non-custodial
heard
smart
a
contract
phrase.
futures exchange. I
Yeah.
mean,
Well, just to be clear, the non-custodial side of it isn't going to be ready in January. That they're still working on now. That's going to be beta ready in March and production ready June 2019.
got it.
So we're going to be opening as a custodial exchange, but you know, that's fine because we're just finding our feet really in that initial stage. So I think it's okay to be doing it like that in stages. By the time the non-custodial side is ready, you know, the order matching engine and all that side of it will be bulletproof by then. So I think it's good that we're doing it in those phases. But yeah, I heard a phrase like you often overestimate what you can achieve in a day or a week or something, and you underestimate what you can achieve in a year. You know, in a year, you can get a lot done. So you think about what we've done. We've gone from literally nothing, from an idea on a white paper to where we are in a year. Where are we going to be in another year? You know, there's the potential for this. 2019 is going to be a huge year for Bitcoin futures, you know, with BACT and NASDAQ and, you know, everything going on. It can't be worse than 2018, really. Crypto cannot be
Knock
worse.
on wood.
I mean, if it is worse, then I don't want to be involved anymore anyway. So, you know, what a horrible year that was.
Oh, yeah, it was a good time.
Yeah. But I mean, even still, the Digitex token in the biggest bear market ever, we were at 16 cents at one point from an ICO price of 1 cent. So, I mean, it was pretty good for us. But yeah, 2019 has got to be a better year than 2018.
There's so much happening in crypto, it'd be crazy for it not to be. I think.
There was just 2018 was just a big disappointment. You know, all the promises of last year, nothing really happened. You know, all the tax and regulation problems that America brought in, you know, just a bunch of scammers, a bunch of stupid projects. You know, it was just a big disappointment, 2018. I think 2019, if we can just skip 2018, I think 2019 is going to be the year.
Skip that year. It's the leap year, guys.
Let's just forget about 2018. That was a false start. 2019 is where it's at.
Oh, goodness. Well, it sounds to me like Arthur Hayes has been put on notice over there at Bitmex. So,
yeah, right.
Adam, very interesting project. I know a lot of people out there are really excited about it. So there'll be a link down below for anybody who wants to check out, you know, join the Telegram group or get some more information about what Digitex is doing. But Adam, thanks for coming on the show and telling everyone a bit about what you guys are doing over at Digitex.
My pleasure. Thanks for having me. I really appreciate it. Thanks, mate.